In this episode, we speak with Larry Cheng and Sean Cantwell, co-founders and managing partners at Volition Capital, a Boston-based growth equity firm that invests in founder-owned companies in the software, internet, and consumer sectors. The firm was founded in 2010 and has over $1.7 billion in assets under management. Larry focuses on investment opportunities in transactional internet applications, e-commerce, digital health, and next-generation consumer brands, while Sean focuses primarily on companies in the software and tech-enabled services sectors. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of Growth Cap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Larry and Sean, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thanks for having us.
So I always like to start at somewhere interesting in your lives, somewhere formative. I'm going to choose something pretty unique here. Sean, can you start us off and tell us about delivering newspapers as a child?
I did not expect that to be the first question I received. And in fact, you never know what's going to come back at you when your head of marketing asks you to share some facts from your past. But boy, what a formative experience in my life. Honestly, I remember walking through the halls of my elementary school, and my friend Gabe and I saw this sign of paper boys wanted. We responded to the ad, we called the number, and we were in fourth grade, and we each picked up our own paper routes. Each of us kept it all the way through high school. So I was a paper carrier for 8 years. Certainly taught me discipline. I had to wake up at 6 a.m. and deliver them newspapers 7 days a week for 8 years. And it just kind of became part of my routine. I think, time management is something that's important in anyone's development. And when you're forced at such a young age to kind of stick to a routine for a really long period of time, I think that ingrains something in you. I'd like to think maybe I learned a little bit of my grit and hustle from those early days as a morning call paper carrier. Shout out Allentown, PA.
How many papers did you deliver on a route?
So my first route was probably 30 papers. And then, you graduate up to probably about 80 houses.
Wow.
So you had generated some good savings for college.
I did. Yeah. So that was back in the day where not only would you deliver the paper, but then every 2 weeks you would have to go around and knock on the door and then collect payment from everyone. So I had to do some accounting before I was aware of spreadsheets or capable of managing them. So I did it in a notebook. So yeah. I guess maybe attention to detail and analytical skills was another trait I developed as part of that experience.
When I was looking at Larry's background, I was trying to pick out, there's quite a few interesting things in your childhood.
What do you have for me, RJ? Let's go.
Let's go with the student-run laundry business.
So I was a sophomore at Harvard. There's a company that's student-run called Harvard Student Agencies. The laundry business was one of those agencies. It did about $400,000 in revenue. And we did wash, dry, fold service for the undergraduates and also linen services and some dry cleaning. And I expanded into tuxedo rental. It meant that maybe it was like every Tuesday and Saturday or something like that, I would be in a truck delivering to various depots around campus laundry that had been washed, dried, and folded and delivering those back to students. And that was a great experience, just running a business in college. I moved up to run the entire company, which was a totally formative experience because I wasn't very good at it. I mean, who's going to be good at that when you're a junior in college? But in so doing, you learn a ton. So that may have been my biggest point of education at Harvard was running the company. And I'm still involved with HSA today.
Excellent. Let's fast forward many years and you're both at Fidelity. How does this happen where the two of you decide to come together and form a firm?
I'll let Larry take that one.
So I joined in 05, is that right? And you were 07, Sean?
06.
And 06, okay. So Sean came a little bit after. And there had always been discussions within the Fidelity context, within Fidelity Ventures context about perhaps one day diversifying LPs because it was a single LP structure and possibly even being independent. And there was a short window after the '08 crash where there was open-mindedness to that. And Sean, Roger Hurwitz, who's our other partner, and myself just kind of looked at each other and said, hey, do you want to do this? And we said yes. We didn't really think about it too much. And we kind of drove a truck through that little window and were able to spin out officially in 2010. The rest is history. It's been a great ride. But that was certainly one that was enabled by the downturn in the economic markets that gave us the window of opportunity to become an independent firm and start Volition.
And I imagine before you take that leap, you kind of want to know that your future partners, it's going to work out, that there's going to be a good relationship, rapport there. Did you know each other well enough to take this leap?
I'll let Sean take that.
Yeah, so we had been working together at this point for a few years. I mean, if I go back to that moment in time, I would have been still in my 30s, early 30s, I guess, and young kids, big mortgage, dependent on an income. So it was a little bit of an entrepreneurial leap, to be sure, but I was so fortunate to have found a place in my career where I liked what I was doing. I enjoyed spending time with the people I was working with, but I also felt like there were shared values amongst the three of us and the broader team that came along to start the firm. And also, by the way, I should say, incredibly competent at what they do and very skilled investors. And I think the combination of those things gave me the confidence to take the leap without really hesitating to think about it.
And as you kick things off with Volition, was there something that came about where you said to yourselves, okay, this is going to be harder than we thought it would be? Or was it smooth sailing?
We spun out in 2010. We had no LP relationships. Why would we? We had one LP in our history. Emerging manager, which is what we were, was a bad term. It's a better term today. And everyone was scared because of the crash that happened. So the first 200 plus LPs that we talked to around the world, anyone who would take a call with us, they didn't actually say no. For the most part, they ghosted us and they just left their options open and welcomed access to the data room and kind of didn't go anywhere. And we just put our heads down and just focused on continuing to tell the story and meeting other LPs and didn't take anything personally. And somewhere in that 201, 202, that LP level, an LP finally said yes. And that's got the ball rolling in the right direction. So no, it was not smooth sailing. We perhaps wildly underestimated the challenge of getting our first fund off the ground. But sometimes ignorance is bliss. You just keep forging ahead.
I'll give Larry credit for being steadfast in some of those tougher times. Because I would routinely go into his office or Roger's office and be like, hey, is this going to work? Are we going to pull this off? Almost like I needed to hear it, even though I believed it. I needed someone else to remind me that we were going to pull it off. But Larry was very steady throughout that process.
And what do you think led you to be so steady in that mindset? Like if you figure you talk to 200, that's a good number of LPs to speak with. You might be like, okay, guys, this may not work. What do you think it was that gave you the confidence that it would work?
I mean, I believed in our strategy and I believed in the competence of us as investors. But I think what is helpful is I also understood why an LP would say no. I didn't take that personally. I mean, it's a totally rational decision at that time. It's a 10 plus year commitment to a blind pool of capital with a set of young investors whose track record is early. It's totally reasonable to say no. And so in my mind, every meeting was more likely to be an investment for a longer term relationship down the road than an investor today in the current fund. And then you just make your luck. It's like my first job in venture that I got, I just said, I'm going to talk to 100 people before I even stop and think about it. So sometimes you got to set goals, do it, run that paper out every single day for 8 years, and you just keep going. And I almost don't look at the results. You just trust the process.
Curious, was the thesis that you went out with, the way you positioned the firm then, how has that changed? Has it changed to what it is now?
I'd say on the edges it has, but it's remained very consistent. And interestingly, as we sit here in 2024, the market environment is not that dissimilar from when we spun out and launched Volition. You're dealing with the aftermath of a period of time where companies raised a lot of money, arguably too much, ramped their spend, arguably too much. There's a market correction where multiples contract in a very meaningful way. And you have a very large piece of the venture landscape dealing with situations where founders and management teams and common shareholders are underwater relative to these big preference stacks. And at that time, I think we leaned on our collective experiences. My formative stages in the industry was at Summit Partners, Larry at Battery and Bessemer, Roger at Apex. And I think we all had a bias towards capital efficient companies. That term comes in and out of favor based on the cost of capital. I think intellectually, entrepreneurs recognize that it's the right way to run a business, being pragmatic, looking for a return on each incremental dollar that's invested. But it's really easy to take capital in times of near zero interest rates, low cost of capital, and investors trying to get money out the door. So in some ways, it's interesting. Right now, entrepreneurs are giving our pitch for us. Oh, we want to run the business in a very disciplined way. We want to secure the foundation and then get really aggressive once we test the variables and identify customer acquisition channels that work. We've been kind of steady with our approach throughout from 2010 to today. You know, the market ebbs and flows. Our approach has been consistent. Interestingly, if you go back to our first fund, I think we probably talked almost exclusively about investing in B2B software. And then the first investment we made was in Chewy.com. I think that speaks a little bit to some of our core DNA as a firm, which, you know, Larry very much beats the drum on, about being contrarian, don't follow the herd, be open-minded to good companies, even if they don't fit a perfect mold. And Larry can tell you more about Chewy if you're interested, but nevertheless, it was mostly a subscription business that had a good scale of business and an opportunity to grow in a really meaningful way. So now if you fast forward to 2024, we operate in two teams, software and then internet and consumer. You could also think of it as almost like subscription businesses and then kind of high volume, predictable transaction type businesses.
Do you think there's a way you are really different than other firms that approach the same sectors? Like, how would you tell a founder, this is why you should partner with us?
I think what's foundational difference for us compared to other growth equity firms is probably our underwriting. And there's different language we would use for our LPs as opposed to the founders that we work with. If you talk to most growth equity firms, their underwriting is probably some sort of base case orientation, underwriting to a 2.5 or 3x. Like that would be a normative underwriting. We've rid the firm of the term base case. We don't think it exists. And it's certainly not 2.5 or 3x. And when you look at historical data, it's about 1.8x. And so our underwriting is around a clear potential for upside, which we define as 5x plus cash on cash return, and like an 80-90% probability that we will not lose capital on the downside. And so think of it as a risk-adjusted approach towards hitting home runs. And so the language that we use with founders, which especially our bootstrap founders care about because their entire net worth oftentimes is in their equity ownership in their company, is we help you achieve your dreams without risking them. And with LPs, it's about achieving great upside without taking undue risk. And that's what's played out in the history of our turns is we have a tremendous batting average at hitting big winners, fund makers. Every single fund has a fund maker that's a mature fund, and our loss rate's been better than buyout. So it's almost like venture like upside with better than buyout like downside. And the value to our bootstrap founders is they know traditional VC has lost money 70% of the time. They don't want to put their net worth into that business model. But they also know the PE investor that's just trying to underwrite to a 2.5x and is going to be super conservative and like not really go for it. So they're looking for a partner who has different tools in the toolkit to help it maximize the value of that company in a risk-adjusted way, whatever that value might be. If it's a $500 million business or a $1 billion business or a $3 billion business, that we know how to sort of scale with them appropriately.
And now that you've been around for about 15 years, can you tell us about, I guess we'll go with each of you, tell us about the transaction or more so maybe the portfolio company and the whole situation, your history with it that you're most proud of and why you're most proud of that particular investment situation?
I'll let Sean go first.
Wow, you're making us like choose amongst children. It's a tough one. I love every portfolio company equally. Maybe I'll talk about one that we've exited so as not to alienate any current portfolio companies. Maybe Jazz HR might be a company. And I say that for a few reasons. We've now been exited from that company probably 5 years now. Applicant tracking software. So recruiting, subscription-based software, really targeting the mid-market. Exceptional founder, guy by the name of Don Charlton, incredibly talented. First time I met him, I was like, wow, I just want to buy stock in this guy. Good product guy, understood the strategic landscape of the market and where the company needed to go. And like most investments, we want to feel like you can be a leader in a market. And we like companies and industries that don't attract large amounts of investor interest and capital. I think in the 3 months after we invested in that company, like 5 other players in the space raised huge sums of capital. So the dynamic changed dramatically. We had some like choppiness along the way. And Don, to his credit, took all the steps necessary to kind of right the ship, including, by the way, saying, hey, we should go hire a CEO, someone who's been there, done that. Very few entrepreneurs have the self-awareness to say that and recognize it. Don did. He and I and other members of the board went out and recruited Pete Lampson, who had been running sales teams for quite some time at various companies, private and public, so multiple venture-funded companies, went on and had a great outcome. It was an investment that we would have thought, gosh, we're kind of focused more on that, boy, let's preserve our capital. Now let's not lose money here, to turning around and having a terrific outcome. You fast forward today, the relationships that have come from that experience, I already talked about Don. One of fellow board members, a guy, Sean Ammirati, teaches at Carnegie Mellon. He's an investor. He's an entrepreneur. Still very close with him. The CEO we brought in, Pete Lampson, is now the COO and head of portfolio operations at Volition Capital. So that is a relationship that came back. And now as a firm, Volition, we're trying to institutionalize kind of that experience. And how do we add value to portfolio companies once we make investments, understanding that, by the way, not every investment is going to be this beautiful up and to the right path. You're going to hit air pockets. And we as a firm want to have the ability to help companies through those challenging times. And now, we have Pete back in here, and we're really going to try and build that muscle internally.
Excellent. Larry?
It's easy to go to your best investments. Sean and I worked on a fund maker together called Global Trans. There's an online freight broker. Chewy was a multi-fund maker in the pet food e-commerce space. Kinetics was a fund maker in the ad tech space. But if you ask me which company I'm most proud of, it's this one. It's Volition. I mean, I was just looking at our entire track record since 2008 when we came together, and our returns are spot on to our underwriting. And that's really hard to do. I'm so proud of that. Like, loss rates where we said it would be, upside is where we said it would be, fund level returns is where we said it would be. So I'm super proud of that.
It's a nice way to turn the question, and a good segue into where I was heading with the conversation, which is, what aspects to firm building do you think have been instrumental to your success?
I'll take the first shot. I think Roger, Sean, and I are different, and we've embraced our differences, and we have different tastes, different risk tolerances, different approaches. And the secret sauce of the firm is the marriage of those differences around a singular strategy. And that's what's made us as successful as we are. And so as a firm, we embrace opposites as one of our core values. We're conviction over consensus, which is one of our core values. And so it enables us to be both focused around our core Volition deal, but be also, where appropriate, contrarian within that context. And so all of that, I think, has played to our success.
Funny enough, I was going to answer the question almost identically, which tells you how well we know each other. Notice Roger is not on this podcast right now. Roger doesn't do media. Roger likes to poke fun at Larry for his Twitter postings.
He's
Follow
jealous.
him at Larry VC, by the way. Roger's never even accessed Twitter. But it is definitely, we're very complimentary of each other, yet we really trust each other to kind of lean in our areas of strength. And I think that's made us stronger as an organization.
Before we head into the tail end of the conversation, one question for each of you. What area of technology are you most excited about?
I'm very interested in the evolution in payments. We have done a couple of different payment investments. One's a split payment company called Mosaic, which supports the creator economy. Another one is in the restaurant space called Revy. And you just see a whole different slew of more advanced, higher service, lower cost, faster payments infrastructure happening across all different types of transactions. And we, as Sean mentioned earlier, we love transactional businesses if they're as predictable and recurring as some of our great subscription companies and software companies. And so I really enjoy the scalability, the clear value prop, and the sort of distinctions in different payment companies that we're seeing.
Excellent.
Yeah. And, I focus more on kind of B2B software. So I think you can't have a conversation like this one without talking about artificial intelligence, maybe not in the way it's being spoken about elsewhere. We're unlikely to kind of invest in a native AI startup that's raising a lot of money to build a proprietary language model, but rather we're investing in software companies that are trying to drive efficiencies, make enterprise workflows more automated, save time, save money. And AI ultimately is code that enables you to do exactly that. It's enabling you to compensate for the shortage of developers. The coding language now most in demand is just English. Most of these software tools are releasing Copilot capabilities where you can just tell the workflow builder what you want and it can automate that for you. So it's often said, but I think it's true. The short-term impact of AI is probably overstated. The long-term impact is probably understated. So the companies we're investing in are thinking about it. They certainly have to have an answer on their AI strategy. And the ones that are most successful are the ones that are going to use it most effectively to solve business problems, which is the name of the game. We're trying to invest in companies that are solving business problems. The beauty of our business is new innovations get made every once in a while that give us job security, because it's just going to unlock a lot of innovation and it's going to flood the market with a lot of new startups. And that's the lifeblood of what we do.
Excellent. Okay, last two questions. One is, can you tell us about a person who has had a profound influence on you?
I'm going to let Sean go because I think I know his answer.
I'm going to say my dad.
That's what I thought.
My dad, first in his family to go to college, attended on an ROTC scholarship, lived at home while attending Villanova University, went and served his country in Vietnam, went on to achieve a level of professional success through a combination of hard work, discipline, and I think making the most of the opportunities put in front of him. But he never lost focus on what was most important, and that was faith and family. And I've just been like a huge beneficiary of having that type of role model in my life. It's funny to talk about getting up in, at age, gosh, I have a fourth grader, 9, at 6 a.m. and delivering 80 newspapers. That didn't feel unusual. The type of upbringing I came up in and the town I came up in. So yeah, to this day, I desperately seek my dad's approval in everything I do. And I seek his counsel whenever I have tough decisions, because he just has a strong core foundation. I come back to like values. It's just so strong. That has been like foundational in everything I've done in my life.
It's a great answer.
If I can twist the question, I'd probably say a group of friends so it's not a single person, that I established in college, who I've been in touch with nearly every single day since college. And the nature of the dialogue, we started a set of discussions on random topics in college and they haven't stopped. So anything that's happening in the world, we talk about. And the beautiful thing about it is we disagree a lot. So I consider myself lucky because I wake up every morning to feedback on ideas and thoughts and issues with people who don't agree with me. And I learn a ton from that. I think it's actually helped in my workplace context. In fact, at Volition, because it's okay to disagree here. So I consider the continuous flow of disagreement from people I trust and respect and care for as a tremendous blessing. And I couldn't imagine it any other way. And those relationships started in college.
Excellent. Okay, last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Sure, I'll go first. I'm a board member of Big Brothers and Big Sisters of Massachusetts. I was a big brother earlier in my career, had a big impact on my life. I was fortunate that one of the partners at Summit at the time was a member of the board. And again, I go back to this point of like having role models. It almost like established this precedent that once you achieve a certain level of success, it's like incumbent upon you and expected to give back in some way and capacity. So the opportunity to get re-engaged with the organization came back to me within the last year. And, the root of the organization, it gives people the opportunity to answer the question you asked me, which is who is most impactful in your life? And it's really providing role models for kids that are in desperate need of role models to kind of show them the path of what is capable. We talk about investing. We all rely on pattern matching. These kids need patterns that they can match and emulate. So that's mine.
I'd probably say for me, I served on the board of an organization called Wycliffe Bible Translators for 9 years. And I was the board chair for the last 3. And their mission is to translate the Bible into all the languages that don't have it, which is quite a lot. And to me, it's not a sexy ministry at all. It's a strategic one where when the Bible enters into a culture and a language community, the whole community changes. I don't think we as a country fully appreciate how much of our culture and who we are as a country has roots into biblical teaching. And so just take out the Bible and look at other countries that don't have it, and you'll see a stark difference. And so I care about that ministry, and it's something that I've devoted a lot of time to and continue to. So it would be that.
Fantastic. Well, Sean and Larry, I want to thank you again for taking the time. This has been a wonderful conversation.
Thanks so much, RJ. Appreciate it.
Thank you, RJ.